This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 16, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is down more than 2%, trading at $64,047, and the Fear and Greed Index has plummeted to 14. That is deep in extreme fear territory. We are seeing a broad-based liquidation across the board, with Ethereum down 3.2% and Solana shedding more than 3%. But amidst this panic, a key headline is circulating about Bitcoin futures demand hitting 2024 lows, while a new U.S. Senate housing bill includes a CBDC ban. Is this a capitulation event where smart money is being flushed out, or are we looking at genuine institutional exit? Let's look at the data. Looking at the calendar for the next few days, the most significant event for crypto markets is the monthly options expiration, or OPEX, landing on Friday, July 17th. This is just 2 days away. Historically, options expiration weeks can see heightened volatility as large institutional positions are rolled or closed. We will be watching to see if the current extreme fear reading persists through Friday, or if the gamma exposure from these expiring contracts provides a floor for prices. Beyond OPEX, there are no major macroeconomic data releases scheduled for the next 24 hours that directly impact crypto valuations, meaning market participants are likely reacting strictly to the current flow of capital and sentiment data. Let's get a clear read on the current state of the market. Bitcoin is at $64,047, down 2.12%. Ethereum is at $1,874, down 3.22%. Solana is at $76.02, down 3.43%. XRP is at $1.10, down 1.74%. The total cryptocurrency market cap has dropped to approximately $2.28 trillion, with a 24-hour volume of $71 billion. Bitcoin dominance is holding at 56.19%, suggesting that the sell-off is broad but led by the majors. The Fear and Greed Index is at a dismal 14, indicating extreme fear. 3 headlines are moving the needle today. First, headlines from Cointelegraph report that Bitcoin futures demand has fallen to 2024 lows, raising questions about whether institutions are exiting the market. Second, a CoinDesk report confirms that the U.S. Senate housing bill includes a ban on a central bank digital currency. Third, Cointelegraph reports that TD Securities views the NYSE tokenization space as an institutional turning point. Let's break down the impact. On the futures demand headline, the crowd is visibly nervous. When retail sees institutional volume drying up, they panic. The sentiment on XRP is actually showing some resilience with bullish articles, but for Bitcoin, the mood is turning toxic. The crowd is interpreting lower futures demand as a lack of conviction from big players.
I want to stress test that narrative. Futures demand falling to 2024 lows sounds like a mass exodus, but let's look at the funding rates. Bitcoin funding is still positive at 0.03% annualized, meaning longs are still paying shorts. This isn't a complete washout, it's a deleveraging. The risk here isn't that everyone is leaving, it's that the remaining longs are overextended and prone to a squeeze.
On the flow side, the CBDC ban is a structural win, but it's a slow burn. The immediate flow concern is the Iranian crypto outflows spiking 700% after geopolitical tensions. That is a sudden, violent liquidity drain. Smart money is moving quickly to avoid jurisdictional risks. That's not a long-term signal, it's a shock event.
Let's start with Bitcoin. It's at $64,047, down 2.12%. Grid, what does the technical structure tell us right now?
The structure is deteriorating. Bitcoin broke below the key psychological level of 65,000 and it hasn't reclaimed it. The next major support zone is the recent low around 64,000. If that breaks, we are looking at a deeper correction toward the 54,000 range, which is where the last major consolidation happened. The volume on the down days is confirming the weakness. This isn't a shallow dip.
The on-chain data supports grid bearish technical read. We are seeing stablecoin outflows accelerating. When stablecoins leave the exchanges and go back to cold wallets, it usually means long-term holders are locking up capital, but when they leave the ecosystem entirely, it signals a desire to exit. Currently, the hash rate is stable, but the transaction volume is dropping. Miners are not being forced to sell yet, but the buying pressure from new entrants has vanished.
And the sentiment is confirming the technical breakdown. The fear and greed index is at 14. That is extreme fear. When the crowd is this fearful, it usually means the panic is near, but it doesn't mean it's over. The 7-day trend is rising from 12 to 14, which is a slight improvement, but we are still in the basement. Retail is not buying the dip. They are waiting for a sign of life.
I agree with Grid on the risk. The biggest risk here is the VIX. Yesterday, the VIX closed at 16.5, which is relatively calm compared to the crypto volatility, but the correlation between SPY and VIX is showing stress. If traditional equities start to crack, Bitcoin will not be spared. We are in a risk-off regime. The 30-day correlation between SPY and Bitcoin is negative, which is unusual, but the 30-day correlation between SPY and VIX is positive, meaning as stocks fall, fear rises. Crypto is caught in the crossfire.
Moving to Ethereum. It is at $1,874, down 3.22%. Grid, how does Ethereum look technically?
Ethereum is weaker than Bitcoin. It's down more than 3% while Bitcoin is down too. The ratio of Ethereum to Bitcoin is breaking down. I'm watching the $1,900 level as immediate resistance. If Ethereum cannot hold 1,800, the path of least resistance is lower. The technical setup is showing a breakdown from the recent consolidation range. There is no bullish divergence here.
On-chain, Ethereum is showing some interesting flow dynamics. While the price is down, we are seeing some accumulation in decentralized finance protocols. Total value locked in major lending protocols is holding steady. This suggests that some institutional players are using the price drop to deploy capital into yield-generating strategies rather than speculating on price appreciation. It's a defensive posture.
Sentiment on Ethereum is more negative than Bitcoin. The community is frustrated. There are fewer bullish articles for Ethereum compared to Bitcoin, and the social buzz is turning hostile. Traders are rotating out of Ethereum into more defensive assets or stablecoins. The fear is that Ethereum is losing its narrative edge.
The risk for Ethereum is the liquidity crunch. With the funding rate positive but price declining, longs are getting squeezed. If we see a spike in liquidations on the long side, Ethereum could drop faster than Bitcoin. The internal models are flashing short signals for Ethereum with a target toward the 1,500 range, which is a significant drop. The risk-reward is not favorable here.
Let's talk about Solana. It is at $76.02, down 3.43%. Grid, what's the setup?
Solana is showing high beta sensitivity. It's down more than 3%, leading the decline among major caps. The key level to watch is $70. If that support breaks, we could see a rapid move toward $69, which is the recent low. The structure is bearish with lower highs forming on the daily chart. Volume is increasing on the down candles, which confirms selling pressure.
Interestingly, Solana's funding rate is neutral, bordering on negative. This means shorts are paying longs, or at least the imbalance is less skewed than on Bitcoin. This could mean that the short squeeze potential is higher here if the price stabilizes. But currently, the flow data shows that whale wallets are reducing exposure. Large holders are moving Solana to exchanges, which is typically a precursor to selling.
The crowd is rotating out of Solana rapidly. It's seen as a high-risk asset in this risk-off environment. When fear is this high, the high-beta assets get hammered first. The sentiment score for Solana is deeply negative.
The risk here is a cascade. If Solana breaks $70, it triggers stop losses from leveraged traders. This can create a liquidity vacuum. The risk is not just a slow grind down, but a sharp spike lower. I'm watching for any sudden volume spikes that would indicate capitulation.
Now, XRP. It is at $1.10, down 1.74%. The headline about the CBDC ban is relevant here. Grid, how does the technicals look?
XRP is holding up relatively well compared to Bitcoin and Ethereum. It's down less than 2%. The key support is $1. If that level holds, we could see a bounce. But the structure is neutral. It's not showing strength, but it's not breaking down aggressively. The volume is light, which suggests a lack of conviction from either buyers or sellers.
The CBDC ban is a massive fundamental tailwind for XRP. It positions XRP as a neutral, borderless settlement layer in a world where central banks are restricted from issuing digital currencies. The on-chain data shows consistent activity in the XRP ledger, particularly in cross-border remittance corridors. This is a long-term structural play, not a short-term trade.
Sentiment on XRP is actually bullish. There are many positive articles about the CBDC ban. The crowd is seeing this as a regulatory win. The sentiment score is positive, and there's a lot of buzz around XRP as a beneficiary of this policy shift.
Be careful. The CBDC ban is a long-term narrative, but the short-term price action is being dragged down by the broader market. Just because the fundamentals are improving doesn't mean the price won't drop further in the short term. The risk is that the market ignores the good news because of the extreme fear in the broader crypto market. XRP is not immune to the liquidity crunch.
Finally, Chainlink. It is at $8.39, down 2.28%. TD Securities sees tokenization as a turning point. Grid, what's the technical view?
Chainlink is down more than 2%, but it's holding above the $8 level. The key resistance is $9. If it can reclaim $9, it could signal a reversal. But currently the trend is downward. The volume is not confirming a bounce. I'm watching for a break below $8, which would open the door to lower levels.
The tokenization narrative is strong. Chainlink is the infrastructure play for this. The on-chain data shows increasing activity in decentralized finance protocols that use Chainlink for Oracle services. As institutional adoption grows, the demand for Chainlink's Oracle services should increase. This is a fundamental accumulation zone, even if the price is weak.
Sentiment on Chainlink is neutral to slightly bullish. The market is starting to recognize the tokenization opportunity. There are bullish articles, but the crowd is still cautious due to the overall market fear.
The risk is execution. If the tokenization trend doesn't gain traction quickly, Chainlink could remain range-bound or drift lower. The market is focused on immediate pain, not long-term potential. I'm warning that if the broader market continues to sell off, Chainlink will follow, regardless of the narrative.
Apex tie this all together. What is the unified outlook?
Pulse sentiment reading of extreme fear at 14 confirms that the market is in a state of panic. Grid technical analysis across Bitcoin, Ethereum and Solana shows clear breakdowns and lower highs, indicating that the downtrend is intact. CIPHER flow data shows stablecoin outflows and whale reductions, which supports the technical bearishness. SPECTER risk assessment highlights the correlation with traditional equity stress and the potential for a liquidity squeeze in high-beta assets like Solana. The consensus is that the market is in a risk-off mode, and without a clear catalyst, the path of least resistance is lower. However, the structural narratives around CBDC bans and tokenization provide a floor for specific assets like XRP and Chainlink in the medium term.
To summarize, Bitcoin is testing critical support at 64,000 amid extreme fear. Ethereum is breaking down technically, and Solana is showing high sensitivity to the risk-off regime. The key takeaway is that the market is dominated by fear and outflows, but structural narratives like CBDC bans and tokenization offer long-term opportunities. Tomorrow, watch the monthly options expiration on Friday, July 17th, to see if it provides a floor for prices. Let's hear your weekly calls for Friday, July 17th. Grid, start with Bitcoin.
Bitcoin is breaking down below 65,000 with high volume, and support at 64,000 is being tested. If that breaks, the next major support is 54,000. My call, Bitcoin bearish, target 62,000 by Friday.
Ethereum.
Ethereum is underperforming Bitcoin, down 3% and breaking key technical levels. The ratio is weakening. My call, Ethereum bearish, target $1,750 by Friday.
Solana.
Solana is showing high beta, down 3% with lower highs forming. Support at $70 is critical. My call, Solana bearish, target $70 by Friday.
Pulse, your call on Bitcoin. The fear and greed index is at 14 and retail is panicking. When fear is this high, it often persists until a catalyst emerges. Without a catalyst, the fear will drive prices lower. My call, Bitcoin bearish, target 63,000 by Friday. XRP. The CBDC ban is a massive positive for XRP, and sentiment is bullish. But the market is in risk-off mode. XRP might outperform, but it won't escape the broader decline entirely. My call, XRP neutral, target $1.05 by Friday. CIPHER, your call on Bitcoin.
Stablecoin outflows are accelerating and whale wallets are reducing exposure. The on-chain data does not support a rebound yet. Miners are not selling, but buying pressure is gone. My call, Bitcoin bearish, target 62,000 by Friday.
Chainlink.
The tokenization narrative is strong and activity on the Chainlink network is increasing. This is a fundamental accumulation zone. However, the price is still down. My call, Chainlink bullish, target $9 by Friday.
SPECTER, your call on Ethereum.
Ethereum is showing signs of a liquidity squeeze. Funding is positive, but price is falling. This is a classic short squeeze setup, but the broader market is too weak. The risk is a further drop if equities sell off. My call, Ethereum bearish, target $1,700 by Friday.
Apex, your call on Bitcoin.
The convergence of extreme fear, technical breakdown, and flow data suggests further downside. The market is in a risk-off regime with no clear catalyst for reversal. My call, Bitcoin bearish, target 62,000 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.